Scene script. Have you ever pondered the idea of financial independence and early retirement? The notion of not having to clock in at 9 or wrestle with the daily grind? Imagine a life where you're not shackled by financial obligations or a demanding job. It's not an impossible dream, but a reality for those who embrace the FIRE movement. That's financial independence, retire early. Consider the tale of Jane, a woman in her early 30s. Jane was an ordinary person living an ordinary life. She had a 9-to-5 job, a mortgage, car payments, and a lifestyle that was comfortable but hardly extravagant. And like most people, she dreamed of a life where she didn't have to worry about money. Jane decided to make a change. She began by cutting back on non-essential expenses, saving as much of her income as possible. She invested wisely, focusing on assets that generated passive income that didn't require her to trade time for money. Slowly but surely, Jane began to build her financial independence. She was still working, but she was no longer living paycheck to paycheck. She had a safety net, a cushion that gave her the freedom to make choices based on what she wanted, not what she needed. Fast forward 10 years, Jane, now in her early 40s, had achieved her goal. She was financially independent. She had enough passive income to cover her living expenses, and she no longer needed to work to survive. She was free to retire early, to spend her time as she pleased. Jane's story may seem extraordinary, but it's not unique. It's the story of anyone who has embraced the principles of the FIRE movement. It's a tale of discipline, of sacrifice, and of a relentless pursuit of financial independence. To summarize, the key points discussed today revolve around the idea of financial independence and early retirement. It requires discipline and sacrifice, cutting back on non-essential expenses and saving as much as possible. It involves investing wisely, focusing on assets that generate passive income. But most importantly, it requires a change in mindset. It's about seeing money not as a means to buy things, but as a tool to buy freedom. It's about understanding the true value of time and the freedom that comes with not having to trade it for money. This is the essence of the FIRE movement. It's not just about retiring early, it's about achieving financial independence, about gaining the freedom to live life on your own terms. Like Jane, you too can embrace the principles of the FIRE movement and embark on a journey towards financial independence and early retirement. After all, the only thing standing between you and your financial freedom is you.
Ever wondered how much you'd need to save to achieve financial independence? The answer lies within the mathematics of a concept known as FIRE, which stands for Financial Independence, Retire Early. The most essential number in your journey to financial independence is calculated by multiplying your annual spend by 25. Notice the emphasis on annual spend, not annual income. This calculation is based on the principle that you need £300 invested for every pound you wish to spend each month in passive income. Hence, your FIRE number is also your monthly spend times 300. This mathematical principle is founded on the 4% safe withdrawal rate, as defined by financial advisor William Bengen. He proposed this rate after analyzing the S&P 500, which typically produces an average of better than 10% growth per year when studied over a period of approximately 30 years. Bengen considered factors such as inflation and market volatility. After studying previous market activity, he concluded that a 4% rate of withdrawal per year would provide for a 30-year sustainable portfolio in the vast majority of cases. So to paint a clearer picture, if your monthly spend is £1,000, then your target for financial independence is 300 times 1,000, or £300,000. Alternatively, if your annual spend is £12,000, your financial independence target is 25 times 12,000, which also equates to £300,000. The first step in planning your financial independence, therefore, lies in understanding your monthly and yearly expenditure. Without this knowledge, it is impossible to take further strides towards your financial freedom. In summary, the mathematics of FIRE revolves around the principle of multiplying your annual spend by 25 or your monthly spend by 300 based on the 4% safe withdrawal rate. Knowing your monthly and annual spend is crucial in determining the amount you need to save to achieve financial independence. Armed with this knowledge, you can then plan your journey towards financial freedom. Remember, the journey to financial independence is not a sprint, but a marathon. Embrace the mathematics of FIRE and take the first step towards your financial independence today.
Good morning, guys. It is 8:57 on Monday the 13th of April 2026. That means we have completed 4 years and 2 weeks of this roughly 8-year FIRE journey, or FIRE experiment if you prefer. A quick look at the market, which opened at 8 o'clock. Currently sitting at 95.59, down 0.5% so far today. And the portfolio itself currently worth 32,164. The return on investment 28.1%. 336 shares in the portfolio, and the average purchase price 74.55. So although we're down 0.5% today, as you can see from the green candlesticks at the end of the graph here, things have risen significantly from last week, and no doubt we'll see the difference in price whenever we look at the notifications. In terms of the previous purchase price. But before we do that, let me just draw your attention to Monzo.
I want a bank that makes money easy.
That sounds perfectly reasonable.
And you are?
We're a bank called Monzo.
I want a bank that shows me what I spend instantly.
No problem, just give us a go. See?
Can you make splitting bills easy?
Super easy, check this out.
But it's a real faff to sign up.
It takes less than 10 minutes.
Race you.
You're on.
Can I talk to a real person 24/7?
Of course.
Even now?
Yep.
Even now?
Anytime.
Can you tell me when I'm running a little low on cash?
We certainly can.
Cool. Can I afford these?
You certainly can't, sorry. Can't afford that either.
That's a real shame.
Not really. Time's up, how'd you get on?
It's a draw. Can you help me save for my next holiday?
Oh, how about you set up a savings pot in the Monzo app called Barbados, baby?
Thanks for listening, Monzo.
We're all ears.
We can go now.
Rude. You make Monzo Monzo.
Okay, so as mentioned at the bottom of the screen there are affiliate links in the description for the video. There are 3 this time. One for Smarty Mobile, one for Monzo, which is the bank that I use. Is basically the current account that I use most frequently, and the other one is actually for Trading 212, which is the platform that you're looking at here. Now the Trading 212 one is valid for another 2 weeks roughly, and I would always issue the warning that I wouldn't want anybody to take advantage of the Trading 212 affiliate link unless you've done your homework. You understand that you could get back less than you invested, that you have looked at other investment platforms and decided that out of them all, Trading 212 is the one where you want to open an account, and that you would have been going to open an account with Trading 212 anyway. And if all those conditions are met, then I would say please do go ahead and use the affiliate link for 212. And as you can imagine, I would benefit from you making use of each of those affiliate links in some way or other. The terms of the offers are made clear whenever you follow the affiliate links, they can vary slightly from time to time. So I'm not going to tell you what they are, because they may have changed since I last looked at them. But going forward, let's have a look at the notifications. So just remember the current market value now, 95.59. Previously, so almost a week ago, 6 days ago, the last purchase that we made was for 94.28, and the time before that was 91.25. So as you can see, the market has recovered significantly, particularly from 2 weeks ago, albeit it's down 0.5% today. So in terms of the actual new notifications, I think that's CoreWeave. I can't tell if it's Core or CareWeave, but anyway, soars 14% as it strikes Anthropic Form AI cloud agreement. That means absolutely nothing to me, as I'm sure you can tell from my hesitation in reading that. Something to do with AI and the cloud, and they're up 14%. Defense stocks fall. RHM down 5%, CSG down 10% amid Ukraine deal speculation. Now that's an interesting thing to point out, is that for some people, war is a profitable enterprise, and basically I suppose typically the sorts of companies that do well during wartime are munitions manufacturers and people who make, well, things that have to do with war, whether that be protective equipment, weapons, weapon systems, all that sort of thing. So the fact that these companies are falling is perhaps a good thing for world peace, if you like. It suggests that the market believes that they are going to be doing less trade in the not too distant future. Okay, that's it for the notifications for today. Let's go ahead and do our weekly investment. So if you're a regular viewer to the channel, you'll know that each week I invest 120 theoretical pounds. Theoretical because this is the Trading 212 practice platform, and we invest that into the Vanguard S&P 500 exchange traded fund. Vanguard chosen simply because of all the different ETFs available. Historically, it has been one of the ones that has had the lowest fees. I'm not certain enough of my facts to say that it is the lowest currently, but they have always strived to keep their fees minimal, and that was basically a desire by Vanguard's creator, Jack Bogle. And I suppose that commitment continues and is basically at the ethos of the Vanguard offering. So, as I say, 120 theoretical pounds being invested at today's current market value. That should buy us roughly 1.25 shares. When we review the purchase, you can see it's a market buy, so we're buying on the open market. We're not setting any stops or limits. The commission is free, and let's send that through. Execution was nearly instantaneous, so we did actually manage to buy 1.25 shares at a purchase price of 95.67. If we look on the right here, I can see that the figures have updated. So the portfolio is now worth 32,300. The return on investment little changed at 28%, There are now 337 shares in the portfolio, and average purchase price will be increased slightly at now 74.63. So just to explain a couple of points that I maybe haven't covered for a while. When we're talking about the average purchase price, that essentially is this green line here. And effectively what it is showing us is, I suppose you could say that the profit, if you like, in this graph is the space basically between the average purchase price here and the current price up here. And I suppose if you were to be at the very beginning of an investment, if you had put in £1,000 and price was unchanged, then your average purchase price would be whatever the say the purchase price was 100, then your average purchase price is going to be 100. On the other hand, if the value of the stock doubled, and you were to, so basically you would go from holding £1,000 worth to £2,000 worth, but then if you invested a further £1,000, you would then find that you had £3,000 for 2,000 invested. So your average purchase price would be, let me think, it wouldn't be 100 anymore, but it wouldn't be, I don't think it would be 150 either. Let me just calculate that. So we are saying that you would have a portfolio value of 3,000, but that you would have 200 shares. I think, isn't that right? Oh, right. Okay, I am incorrect. Your average purchase price would actually be 15 then, as opposed to, or yeah, 15 as opposed to what I had thought. So you're basically it is the average. It's where you've basically what you've achieved, I suppose, in a sense. Trying to think on a good way to explain average purchase price. I suppose the important thing to retain is that the more you have invested, the less you can influence the average purchase price. Let me put it this way: at the very start of the investment, whenever I invested that first £120, if there had been a 10% change in price, the next time I invested another £120, then the average purchase price could have been influenced quite a lot. But now with 32,000 invested, a change of £120 is a tiny fraction of that. So therefore the average purchase price can only be influenced an awful lot less. Hopefully that makes sense. I suppose the other things that are perhaps worth pointing out on this graph, if we zoom back or out a little bit in terms of time, if we come way back here to the left hand side, you can just about see 2020 on the screen, and you'll notice the market was on a sort of typical climb, really, and then there's this shoot, and that shoot is actually the COVID effect, the effect of lockdowns, repurposing of the NHS, and I suppose to a certain extent shutdown of a lot of global industry, including travel to a large extent. That was then followed not long after by a V-shaped recovery. The market had continued on a normal trajectory up until the start of the Ukraine conflict, which is roughly here. And then there was a period of fluctuating stability, I suppose you could call that, with slight, is maybe not so obvious when you look at this graph, but there was slightly bigger uncertainty and fluctuation at the start. So I suppose if you were to consider this as a kind of a wave, the amplitude of the waves was larger at the start, and then it kind of gradually normalized, and then the market actually picked up again, a sort of more normal looking trajectory, then actually showed quite a rise, which actually, if you think about it, if you were to draw a line on that, you would pretty much see that, I'm just looking if I've got a thing that I can use to draw a line here. Oh, right, okay, that's not what I intended to do. There we go. I think this will give us a line. Yeah, basically what I was wanting to show is just that if you were to kind of draw a line up through that, you could almost see that it looks as if that is a kind of a normal trajectory for the market, at least going back over the period on screen there. In fact, maybe I should have brought that back a little further, but in any case, as you can see, following the COVID effect, that roughly tracks where price was, with a few exceptions. The conflict in the Ukraine had a fairly negative effect, but the market appeared to have rallied, and it was doing really quite well up until the time of the tariff announcements by Donald Trump, which essentially then caused this further shoot. Let me just have a look here, because I don't think that is showing the way I like to have it normally. I think it's maybe this one that's the one I normally use. So yeah, the tariffs announcement by Donald Trump caused a COVID-like shoot to a certain extent. As you can see, I mean, the market took quite a dip, and as we know, companies scrambled to renegotiate things. Countries scrambled to renegotiate things, and we saw yet another V-shaped recovery. So to be honest, I would say that those in the know probably made quite some amount of money during that time. But this is the nature of investing. Sometimes the market is what I would call news reactive. What has been shown to be the winning strategy by a financial advisor by the name of William Bengen is essentially to invest consistently and, in essence, with disregard to the news. So after the tariffs announcement, somewhere around here, I suppose, we have this conflict with Iran, and a little bit of a dip as a result from that. Things appear, to a certain extent, to be kind of settling as regards that. The United States has not had the international support that they hoped for, and indeed, it would be probably fair to say that Israel has come in for an awful lot of criticism for how they have propagated this war against Iran, and not just Iran, but that they have attacked Lebanon as well. And some people suggest that Trump has been naive in listening to Israeli rhetoric. You can make your own mind up on that, but basically that is kind of the political background, I suppose, to the situation that we see in the stock market at the present time. So I suppose, given that there was talk of a ceasefire, or indeed that there was a partial ceasefire introduced in Iran, I believe, for a temporary period, but nonetheless, and then obviously this talk of a deal in the Ukrainian conflict, that helps to explain why we see this slight rise over the course of the past fortnight or so. Guys, that is going to be it for this week. It only remains for me to thank you for watching, to invite you to subscribe to the channel if you're interested in following the journey, or indeed if you particularly enjoyed this episode, to give it a thumbs up. But other than that, I'll be back at some point next week with more. Thanks for watching.
Woke up one morning, saw the world in a new light. No more 9 to 5, I'm living my own fight. I got a plan that's simple, a number game to play. It's the freedom that I'm chasing, I'm walking away. They said it's impossible, just a dream so far, but I've learned to count the cost. Now I'm driving my own car. I don't need a mansion, don't need a fancy name. I've got peace of mind and I'm free from the daily grind shame. It's not magic, it's maths, it's a clear-cut path. Building wealth day by day, it's all about the craft. I've got my numbers straight, my future's looking bright. No more working for a paycheck, I'm free to take flight. It's not magic, it's maths, it's the way I live. Financial freedom's waiting, with all that I can give. I cut back on the clutter, I got my spending in check, investing in my future, no time for regret. The years go by faster, my money is working too. I got a plan that's steady and it's seeing me through. They said I couldn't do it, said it wouldn't last, but I'm retiring early, leaving all that stress in the past. I'm building my empire, brick by brick. The math's all adding up and it's working real quick. It's not magic, it's maths, it's a clear-cut path. Building wealth day by day, it's all about the craft. I've got my numbers straight, my future's looking bright. No more working for a paycheck, I'm free to take flight. It's not magic, it's maths, it's the way I live. Financial freedom's waiting, with all that I can give. It's the power of the numbers, that's where I stand. I'm taking control and I got the upper hand. No more chasing time, no more chasing fear. With the maths in my favor, my dream is crystal clear. It's not magic, it's maths, it's a clear-cut path. Building wealth day by day, it's all about the craft. I've got my numbers straight, my future's looking bright. No more working for a paycheck, I'm free to take flight. It's not magic, it's maths, it's the way I live. Financial freedom's waiting, with all that I can give. So head to the future, here's to the plan. Financial freedom, it's all in my hand. It's not magic, it's maths, and it's mine to take. A life of freedom, No more decisions to make.